Hey, coconuts. Welcome back to our Tuesday's weekly market updates. Rakesh here.
Anthony here.
And today we've got three things to talk to you about. Honestly, we realized that we're taking quite a long time. We couldn't stick within 30 minutes. We wanted to. So we're cutting our slots down, talking about three things today. I think to start off with, we're going to talk a little bit about the price movements, right? Especially in the US market, China as well. And how effectively, if you have invested, we've had a series of body blows. Stocks are moving up and down like crazy. We're going to talk about that a little more so that we all have a little bit more understanding.
Yeah, man, it's been a roller coaster ride the last 2-3 weeks. I think time just flies when you're going through that. And speaking of roller coasters, once we have that general point, we talk a bit about Didi and its delisting from the NYSE. That's not a roller coaster. It has just gone straight down since IPO essentially.
Well, that's not a good thing, right? But good to talk about. I think it just got delisted. And lastly, we're going to talk a little bit about Alibaba, right? There's been an executive shakeup with Alibaba, and actually the stocks also saw a 10% increase. So we're going to bring up on that. Awesome. I think we'll start off with the big topic. It's a bit macro right now. It's a bit just sort of understanding where we are. And so please let us know how you feel about this section. We thought it'll be interesting to talk about this because if you're invested, and our target audience, you guys are invested as well. It's been a roller coaster, right? I've had heart attacks. I was really happy one day. Anthony, what are your thoughts?
I don't know. I think maybe just to take a step back and take stock, right? We look at the major indices. S&P is down 2% in a month. Nasdaq's down 4.5, 4.7, I think. Nasdaq 100, so mega cap is down 3. And then we look at the smaller ones, the growth stocks. Your Russell 2000 is down 9.7 in a month. Russell 2000 growth is down nearly 12. ARK, Katie Wood must be sad. Not really, she has fees, but ARK is down 23% in a month, 11% just in the last
These
week
are the
alone.
ETFs, yeah?
Yeah, these are all ETFs, right? This is not a single stock. We're
Yes.
not talking about DocuSign dropping 40% post earnings.
Not yet, anyways.
These are index with these are ETFs with 2,000 shared stocks in them, and they are down nearly 10% or more a month, right? It's a bloodbath. And yeah, for those that think that Bitcoin is negatively correlated, I have news for you. They dropped 20% last month. So yeah, it feels risk off to me, right? Generally, but what are your thoughts?
Yeah, definitely. Why don't you explain to us what risk off is?
Oh, sorry. But just risk off to me just means people don't like risky assets anymore. So not. I mean, if you think about it, equities are risky compared to bonds, yes. But even within the equity space, buying something like Amplitude or Rivian is intrinsically more risky than buying Apple or Facebook or Amazon, right? It's just size and the maturity of their business.
Yep. Gotcha. Cool, man. Firstly, thanks for naming your book. I think that's quite, quite
No,
helpful.
I have indexes, but not DocuSign, thankfully.
Okay. Got you. I mean, yeah, on my side, just before we jump into understanding a little bit more about what's exactly happening, it's a little scary, right? I mean, you think you've done your research, you've looked at your price sales ratio, you've looked at the books, fundamentally they look okay. You've been making money the last 6 months, and then all of a sudden, bam, in a matter of 2 weeks, it's wiped out, right? Effectively, unless you've gone in maybe in early 2020 when COVID was just starting, maybe you're still on positive. But if you've gone in just in the last quarter or even in the last 2 quarters, it's down hard. So it is quite scary for everyone, including myself. And that's why we thought we would discuss this a little bit more, right? And it's, I think, Anthony, for me, when we're looking at these markets, and I'm quite heavy in tech. I cannot say that I am diversified. I don't have ETFs like yourself. I don't have indices. I'm quite heavy in tech, and not even big tech, right? So we've got the works of HubSpot, for example. We've got the works of Amplitude. You name it, right? Those smaller stocks that you think would be growth stocks. Those are the ones I'm invested in, and that's honestly quite painful. How have you been doing it?
It's been painful, I think. But to me, this is a good thing, right? Look, I think again, zooming super big picture, we are young, right? We are not retiring next year. We are still in our phase where we are accumulating more and more. And honestly, if we could choose between having a downturn now and having a boom market when we retire and need the money, versus having a boom market now, but if it falling 50% just before I retire, I'm choosing this, right? All the time.
Of
So,
course.
I mean, from that perspective, and I think that's the right perspective that people our age should take. We are accumulating.
Mhm.
I think it's great opportunities. It's maybe a bit of a step back to take stock. If we have profits, take profits. If we have losses, think about cutting them. I haven't, but yeah, it's not necessarily a bad thing. It feels painful, but it's one of those things that will be make it better over time. I would say.
Yes, and I think we all shocked at least in this last couple of weeks. But I think one thing to note is that major indices are still up from year to date, right? So if you take a look at January 2021, right now until 7th December 2021, we're still up. So I think that's some good comfort there that we can take. So if you are in from January, you're okay. Except that obviously, if you look at a shorter time frame and you just invested, say, after the last earnings call, where we had our session about 3-4 weeks ago, it's a bit negative there. One thing though that I am doing, right, in my strategy is that I'm honestly not even looking at the stocks right now. It's quite painful to look at my portfolio, but instead what I do is on my phone I have the regular stocks, and if it goes to a lower level, I actually put in a bid to buy again, right? Effectively DCA or dollar cost averaging. And I think for myself, what I'm relying myself on is that yes, I have done my research. The numbers in the stock market does not reflect what is going on in the day-to-day business of the company. And I think that's really, really important to say and to do that, right? And of course, last week we talked a bit about Omicron, and this could be the reason why. And it's an external
No
factor.
man,
So I think
that's
believing in
that.
external factor.
I'm sorry. I think that's just media narrative. It's rubbish. If
Yeah.
it was Omicron, you would see your Zooms and your Pelotons zoom back up, for lack of a better word.
Mm,
So I think that's partially a media narrative. Maybe it's tapering of the Fed, because they have because Powell doesn't like the word transitory anymore and thinks inflation is here to stay. That could I think it be a slightly more logical reason to me. I can see a cause and effect
true.
link there, but yeah,
But I
you know.
disagree, right? Media narrative holds a big point in each of our hearts. If the media says something, more often than not, people believe it. And if the people believe
Yeah,
it, they might, right? So
it's
they
just
might
media
feel
narrative that doesn't make sense.
okay,
If
yeah.
we think about it a bit more. Yeah.
Correct.
It's
Yeah. So
important,
it
yes,
doesn't
right?
mm,
We like patterns, we like stories, but if you think about it slightly harder, I honestly don't think it makes sense for this instance, right? Sometimes they're right. This is one time I disagree with.
got it. I mean, and when you look at these things, right? So as we look at the different stocks going through, so on and so forth, where do you think we could be, right? So as you mentioned, or as I mentioned, I'm doing DCA. What are you doing as well, Anthony? What are your plays here?
Yeah, so I think maybe just circle back a bit, right? We talked about buying indexes, and if you look at it, the S&P hasn't really dropped, right? It's down 2%.
Two
That's a
percent.
broad-based index. QQQ big tech hasn't really dropped. I think the pain has been in a lot of what we own of smaller growthier tech stocks, right? It's not in your fangs or mangas or mamatans or whatever the acronym is now. We'll talk about it later. It's the big tech is okay, right? They are the safe haven now, and that to me, I see it again as a bit of a risk off narrative. People don't like your small 60 70 price to sales stocks now. They go to Google
Mm,
and yeah, I'm paying 20% price sales, right? And it's fantastic, and that's safe. So if I were to bet, right, I think and if I'm right and we are going into a lot more of a risk off mode, big tech is the next to be hit, right? It cannot be that they are the only ones spared from a market downturn. If sentiment turns, it turns against the entire market. That's what has happened. That's what happened in the last taper tantrum. It's not. I mean, it's not always exactly the same, but I think it's instructive in a sense. So, for me, what I've done, I have taken out quite a bit of cash, I had a lot of cash to begin with because I found everything expensive, so
Right.
that's not been too bad. I'm in
So you
Singapore,
said
SRU.
you took out some cash. Did you
Yep.
effectively make a loss in that? Were you still on a gain? How did that work?
Yeah, so
You cut your
I
losses?
mean, there were some that I had profits, so I just took profits of them. I redeployed some of it into things that I felt had been beaten down too much, like Zoom, as we talked about last week.
Yeah.
So yeah, it's I think a bit of taking a bit of money off the table, being less exposed. I have put quite a bit more money into Singapore dividend shares, right? So I always get cash flow. I have stability in terms of beating inflation at least. It was inflation in Singapore was at 4%. That's lower than my dividend
Mm,
yield. I'm relatively safe there. That's like 60-70% of my portfolio. I started buying a bit more, big tech index. So I bought QQQ just as a buffer again for the next few months
yeah.
the while it bleeds. The only thing I think I haven't done, which I was contemplating last night, was to short something, right? It literally getting a
Right.
hedge onto small growth stocks. And I mean, look, we think about shorting as, oh yeah, this is difficult. We need derivatives. Actually, you might not, right? So I looked at my portfolio. It looks quite a bit like the ARK ETF, which is
Right.
why I brought it as a comparison, right? And there's actually this ticker called SARK, SARK, which is short ARK,
Hmm.
right? And you can long it,
Oh,
and it effectively shorts ARK. So
so
that if
you
you want to,
interesting.
yeah. So
So
if
you don't
you
actually
think
have
that
to go in
yeah,
to buy derivatives. You can actually
no, you
just
don't.
long
You
this
you
ETF.
Yes,
Is it an
I mean
ETF?
that.
Yeah.
Yes, it's an ETF. There's some technical things about like decay and all that, but I think if you're shorting for a month or two, it doesn't take too much off, right? So possible. I was
Mm.
thinking about it. I was like, oh yeah, well, it's a small part of the portfolio. This is too much hassle. I'm not going to do it. But I mean, I think for the stock pickers out there, if you know your stocks, you have confidence in them, but you want to kind of remove yourself from the momentum, right? That might be
Mm.
the play to go. So yeah, something to think about.
Yeah, definitely interesting, right? It I think for me it's also the fact that there's been a lot of liquidity in the market, right? And I'm going to throw you another spanner here, Anthony, and I want you to hear your thoughts. I want to hear your thoughts on this. It'll be coming to, yes, we've got the Omicron, we've got people that are a little volatile, a bit worried, but also Christmas seasons, right?
Mhm.
Christmas season is
Santa
coming up.
rally.
The the expenditure of your you probably meeting your families after 2 years. On my Instagram, at least every other day, it's somebody that says, hey, I'm back home after 2.5 years. I brought lots of presents for everyone. So that's also something to think about, right? What are your thoughts in the fact that, you know what, I've made some money, I want to spend it a little bit and take the money out and see what I can do with that.
Yeah, I think that's a bit of that's a continuation of a trend, right? After, if you look at the months, I think July to September, we saw huge increases in consumer spending in the US,
Mm,
attributed again by the media to the end of lockdowns and revenge spending, right? You see that in the US, you see that in China. It's the same. They seem they've got their story straight this time, and I kind of see why, right? Because I spent a lot on during after lockdown too, and I think anecdotally, you want to get to a Michelin star restaurant now, be prepared to book a month or two in advance, right? It's
right.
insane how people want to spend money. So I think that it makes sense. I don't know how much it affects. I think look, it will affect your retailers, right? To the extent that it pulls forward some demand. But is it going to be that great an impact? Is it, or do we just account it
Mm.
as a one-off seasonal thing? I think it
Yeah.
really depends on the company and what they're selling. Yeah.
Got it. Got it. No, interesting. And I think it's something that, for coconuts out there is something to think about. Of course, I believe there is a Fed ruling coming out mid-December as well to see how that will be, if they are going to increase the rates and so on and so forth. So please
Yeah.
do keep all of that in mind. I think one other
Yeah.
point sorry, go for it, Anthony.
No, I was just gonna say we need Jefferson in soon to talk about Fed tapering, man, and we can do another macro topic just for 15 minutes about how it all gets affected.
Definitely. And I think next week would be a good time. We'll try and get him in by then, so that he can come in and talk to us about it. Cool. I think I do want to talk about one more thing. Is
Mhm.
that do you think that these corporations, these growth stocks, would it be a good time for them to, like, for example, buy back some of these stocks because it's of decent value right now?
Yeah, I think. I mean, look, to me the reality is in if you are if you're a US listed company, you are growth share. You don't ever do dividends, right? It's tax
Mm,
inefficient. It sends the wrong signal. All you do is share buybacks. It's a form of returning. I mean, they serve the same purpose. They're returning capital to investors. It's just, I guess, there's a slightly different tax treatment there and a different market perception. So I think we can look out for it. And more than share buybacks, I think we can look out for more insider buying. Sorry.
mm.
If we start seeing, well, not Elon Musk because he's just exercises options, but and not Satya because he sold 50% of his stake in Microsoft. But I mean, if you see Jensen Huang buying Nvidia hand over fist, I think that's a sign, right?
Mm.
And insider buying tends to be a relatively decent indicator. So that might be a sign actually if you're looking at individual companies where the CEO starts buying back shares and you go, oh yeah, maybe it's slightly oversold. The market has thrown the baby out of the bathwater, right? They wanted to sell, everything got sold off, but this is a good company. The people who know best, management, theoretically, think that it's undervalued. They are buying, they want to make money because everybody does. So let me track them and follow it. Right? I think that's
Awesome.
something to look out for.
Awesome. Cool. Now, Coconuts, hope you learned a few takeaways there. We'll keep this going. We probably will have another macro topic. We'll see how this week goes, and then
Yeah.
we'll take it
But
from there.
I think don't be. I mean, if managing emotions is part of this, right? It's a long process. We all want to accumulate money for the next 10, 20 years. So stay strong, right? And we'll get through this.
Absolutely.
If we enjoy the ride up, we should also enjoy the ride down.
That's true. That's true.
I'm trying.
We can try. We'll go and cry after this, right?
Yes.
Awesome. All right. So I think let's move on to the next topic, Anthony. What do you have for us?
All right. The next one would be Didi's delisting. Didi delisting. Yeah. So for those who don't know, Didi is a Chinese company. They are a ride-hailing company equivalent to Uber or Grab in China. They're the largest one. They're clear market leader in China, right? They listed in the New York Stock Exchange, I think 6 months back. 2 days later, the Chinese government asked, "Why did you do this? You have confidential national security information. You shouldn't have done this." And the stock has just gone downhill since then, right? It is listed at 14. It's now at $6. So you
Oh
think
wow.
your growth stocks are bad. This is worse. And I think to maybe hopefully put a bit of an end to the saga. They just announced 3 or 4 days back, just before the weekend, that they were looking to delist from New York and maybe relist and will relist, sorry, on another globally recognized exchange, and you'll be able to swap your shares around and things like that. Hopefully that addresses the underlying data security concerns that the Chinese regulators had, but yeah, we'll see.
Okay. Well, that's pretty straightforward. So it was the reason for the delisting was because of this information, sort of confidential information that they had on on Chinese Chinese government
Um,
within the
well,
Chinese
I
government, or
think
just the people.
I think that's all speculation, right? So I mean, you
Mm.
think about ride hailing, theoretically, and I think this was an issue with Strava, the app, the running app long ago, where you could look at people's running routes and track out what an army camp looked like in the US. Right, this is the same. If you
Oh.
could find information about this high level official taking an Uber or sorry, a Didi car to somewhere else, you could kind of see where they were going and kind of pinpoint places of interest and all of that. So I mean, just based on an analogy to the Strava app issue, it it's not impossible that there are real national security concerns, right? The rumor flying around is that the Chinese regulators asked them to delist. I'm that
Mm.
could make sense. I don't know. That I'm sure that there was some pressure applied from the high levels down, but I mean, you have listed your stock price has taken a beating. Why wouldn't you delist, right? And again, anecdotally, just from work, there's a lot of plans for delisting from the New York Stock Exchange, right?
Mm.
Especially for companies that have been beaten down. I think a few
Mm.
months back we had the education furor, right, in China, right? People got shares got taken down by 90%. Those are
Yep.
almost all going to delist. There are plans in place. It's just the matter of time.
Got it. Got it. Okay. Interesting.
Yeah.
You know, sorry, go for it.
Yeah, and sorry, I think one thing that is slightly different for Didi is that usually, right, there's really two ways to do it. One is you privatize yourself. So for instance, you had $100 share, it's been whacked down to $10, right? 90% down.
Mm.
And you go, oh fine, whatever. I'm the owner. I find a few PE buyers in and I delist for 12, right? You pay the premium, you take it private, and 2 years later, you relist in Hong Kong for 20 and 25, and everybody's happy, essentially. So that's one model. But what DT is doing apparently is different. They'll just go straight to Hong Kong to IPO, and that's it, right? So they'll be dual listed like Alibaba, like higher, and yeah, that's it.
Got it. So they are, so just to clarify, they're delisting from NYSE, but they're going to list on the Hong Kong Stock Exchange.
Well, they're going to list somewhere. They haven't said where, but Hong Kong seems to be the only
Mm.
logical choice. And we also don't know when they'll delist. They just say we are going to. So it could be before the Hong Kong listing. It could be after. But to me, before doesn't make sense because then you can't transfer your shares. You have to privatize it, and it's going to.
Mm.
I mean, even with the 50% drop, it's going to take a lot of money to privatize them, right?
Got it.
And we don't know where they'll come from.
Fair enough. Wow. Interesting. This is, yeah. I mean, for me, it's wreaking. I mean, currently, as we know, there is this sort of U.S.-China tensions, and I don't know if part of this is playing a little bit in there. It may not be. I may be sort of fabricating this whole thing, but it is something that I'm wondering as well, right?
Yeah, definitely. I think the whole U.S. China thing is playing itself out in different areas, right? And one of which is really the stock exchanges, and China wanting
Mm.
to have some sort of control and sovereignty over their companies, right? Um, I don't know, right? I mean, would you think, let's say that there's a company, let's say Alibaba, right? It's listed in New York, it's listed in Hong Kong. They are technically the same shares. Would you buy the share in Hong Kong or would you buy it in New York?
Well, for me, I buy it in New York mainly because I already have a couple of stocks there, in that market. I would probably buy in New York because I know that area better.
Okay, that's interesting because I mean I was thinking about that, so I was like, oh yeah, I'm buying in Hong Kong, right? It's the same time zone. I don't need to look at it at midnight and so oh it's going down. Let me sell it. I can just do it during business hours while hiding in the toilet from my boss. So, yeah, Hong Kong for me. And I think that's the difference, right? It's trading zones. It's whether institutions can invest in it and whether they have the mandate and the will to stay up late if you're a US fund
Mm.
manager to trade the Hong Kong shares rather than the other way around. Yeah,
Got it.
but interesting.
Yeah, cool. Awesome. Thanks for that, Anthony. I think that was a good one. All right.
Yeah,
And
no
lastly, we're
worries.
going to talk a little bit about Alibaba, right? So obviously Alibaba has been on a downtrend this past couple of weeks, past couple of months. I
Months.
believe months, yes, right. We even had one of our market updates where we're talking about a few people buying into Alibaba during this downtime. And it surged a little bit, right? Last week, 10% it surged. Now, right, obviously they have restructured a little bit. They have changed their CFO. And right, and maybe let me take you through that. Right. So first, the
Yep.
CFO has changed to Toby.
Mm-hmm.
Um, Secondly, they're looking to sort of realign and re-strategize on how they go about their business. So Alibaba is going to be split into two: one focusing on China commerce, one focusing on international commerce. Right. So
Okay.
brands like AliExpress, Lazada, those will stay in the international section,
Mm-hmm.
whereas everything focused on China will stay in that company in that form, sort of
Okay.
split it up. According to them, it will improve supply chain costs, right? And that's
Cool.
effectively all we got from
How does that work,
from
right?
this.
Like just spitballing here. How,
Yeah.
is it just different cost centers, right? Shared services. How could this conceivably play out?
Honestly,
Do
I
do
I
do we
don't
know?
know. I honestly don't know. I think it's maybe it's just looking at the books and sort of coming up with it, or are they taking some sort of other approach, right, to this Chinese company, right? Are
Mm.
they sort of increasing or decreasing the cost because they're purchasing other companies, or the merchants, for example, will be paying their own shipping, or part of it at least. Do you know anything about this, Anthony?
No, not at all.
Yeah.
I mean, I'm just curious. The only thing I
Mm.
know about this is that this they have this company called Chai Niao, which is um, well, vegetable bird, I guess, if we are translating it literally,
Okay.
which is their logistics arm, right? Essentially, like you have Amazon who do, and the Amazon part that does logistics. Alibaba is the same thing. Just
Hmm.
to move between warehouses, internalize the cost and stuff like that.
Right. Cool. Yeah, so I'm not entirely sure, but they did mention this. I guess we'll see in next quarter when they do report, right? And tell us how it's improved or how it's decreased.
Yeah.
But I think one thing to note here, and specifically onto why it has surged, is because there were fears that the Chinese government were forcing countries, or rather the
Hmm.
companies, to delist their shares, right? We saw it with Didi, that you just spoke about, and there was all this stuff, the crackdown that we had on education a few months ago, and how we expect it to sort of, or rather how the people expected it to move towards commerce and the big conglomerates. I think one thing good to note, though, is that the China government came out, or the regulatory commission came out and said that that's completely misleading. That's not what we want to do. And as soon as they said that, it shot back up.
Yeah, I'm glad they said it. I mean, I wish they could have said it months ago before all this happened. To be honest, I have Alibaba, right, and Tencent,
Right.
and a lot of other Hong Kong shares. But yeah, I mean, look, it always was a long shot. Again, to me, the whole VIE structure, getting made illegal
Mm,
retrospectively was always a Western media narrative actually that would have never happened, right? China would not allow them to do it, not at this stage. Maybe 20 years down the line, when they have their own developed capital markets ecosystem, they could just to incentivize people to stay in China. But now, nah, that was always just building a straw man and demolishing it and going hooray. So
yep.
so I'm
Yep.
glad there's clarity. But I mean, maybe just circling back a bit, I mean, we have been talking about earnings. Alibaba has had earnings. What's their business like now? I mean, Taobao to me is huge and is a source we go to for cheap stuff. But yeah, how is their business operating?
Yeah, that's a very good question, right? So we actually saw slower growth during the
Mhm.
quarter, right? Something called CMR, which is the, correct me, Anthony, this is the merchandise revenue. What does CMR stand for again?
I think it's customer management revenue, something like that. It's
Customer
about their
management.
their add-on services to vendors essentially.
Yes, so that has thanks for that. So that has actually slower growth, or rather, it's slowed down
Hmm.
in that sense, as well as gross merchandising value, or
Yep.
gross merchandise value has also
Yep.
been slower, right? So
Okay.
that in effect, right, if we can just distill down into
Hmm.
four key points, we have seen lower than expected gross merchandise value, right? It's probably due to the competition. It's probably due to the markets. People are a little volatile. People are wary. Right? I guess these cheap China goods as well. They're probably looking at other stuff. So I think one of the key things here is that it's it was expected to be a lot higher than it actually is in terms
Yep.
of monetization in the retail market in China. So that's one.
Okay.
Number two, they are trying to execute on strategic investments, but it's
Mm-hmm.
not rolling out to be exactly as it is. Right? It's coming out
Okay.
weaker, so less than expected. And number three, they also saw, Ali Cloud. It's a big thing. Obviously, you need to
Yep.
you need to go for it. Alibaba's massive in China, Ali Cloud at least. That has also seen a growth deceleration. So even
Okay.
though we did see a price increase, it's good to take note that in terms of the market or in terms of the business, these are the things that has been happening, right? Which
Yep.
also could explain why they're trying to split and trying to reorganize themselves.
Yeah, I mean, just look at them and C, right? C is pretty much not in China, but everywhere else,
Yeah.
in Asia, and it's going gangbusters. I don't think
Mm,
C actually has greater GMV than or greater profits or greater revenue than Alibaba. I haven't looked, but I highly doubt so. But just in terms of market cap, they're about there. Which begs the question: what is the market thinking? Come on, this is
absolutely.
ridiculous.
We were circling back to the exact first point we talked about, right?
Yeah, well, yes, just that C has taken a beating with the other growth shares. So maybe
Of
the
course.
market is waking up and we are making a bit more sense now. But yeah, good on the business. Personally, I'm slightly surprised by the cloud thing, given that they literally have very little competition, right? AWS is
Mm,
barely in there due to US China tensions. Azure, Microsoft also not really there because
nope.
of
Yeah.
US China tensions. So what are they
We know
doing?
there's no
We need a
Google.
stock. Yeah, there's no Google as well. There's no Digital Ocean. We need a stock breakout on the Chinese cloud market, right? Because we look at cloud
Definitely.
adoption in the Western and non-China world, and it's accelerating. What's China doing? Is it just different, or have the winners just not been there? And it's a $1 trillion market that a winner could take, and poof, that's a company that we want to be in.
Absolutely. Definitely.
Cool.
It's I think it's good to keep note of this. Coconuts, if you're listening, good to just keep an eye on this, especially if you're in the China market. The cloud space is definitely a good area to look at least in the next quarter or so.
Yeah, and sorry, just one last point for me. I mean, we talk about sales, we talk about GMV, and go, oh yeah, it's growing, it's not. But just to give a sense of scale, right? Shopify, which is I think the second largest retailer in the US, at least the other counterpoint to Amazon, essentially. Black Friday over Thanksgiving, Black Friday weekend, Cyber Monday, they announced 2.9 billion, I think, in GMV USD, right? And that was like,
Right.
whoa, historical, big, largest ever result. Alibaba, Singles Day, 11/11, 84 billion,
Oh wow.
nearly 30 times, right? That's the scale that we're talking about. And they're similar market caps. So again, what's the market doing? It's you do this type of relative, comparisons, and you go, wait a minute, how does this ever make sense? And I don't know, right? Maybe growth is slowing, people don't like it, and we see Alibaba as a value share. I can see that point. But yeah,
Mm.
I think it's a name to keep note of, right? Given how bad the price action has been.
Yes, yes, no, for sure. And I think, for you coconuts out there, if you're understanding a little bit more about the China market, I think specifically to do with delisting, as we talked a bit about Didi, we are having an episode tomorrow. So please feel free to go into our main Financial Coconut podcast. You can find that on Apple Podcasts or Spotify. We are rolling out an episode talking about delisting risk in China. So
Hooray. Chinese
little
stuff.
bit of, yeah, exactly. A little bit of Chinese stuff going on. Awesome. I think we have come to the end of the episode. Thank you so much for listening. We hope to have Jefferson next week. That's our third host for our
Yep.
TFC weekly market, or you might see Reggie as well. So
Yeah, and we can just talk about China again, right?
probably knowing Reggie, you'll probably want to talk about China as
Yeah.
well. One thing we didn't talk about today, Anthony, is Grab. But I think we can save that for next week.
Let's not. I mean, okay, one share that I don't own, primarily because I've dealt with them and I just did not like how they dealt with things. But yeah, it's an interesting one, right? They just got the timing. Well, no, sorry. The owner got the timing completely right because he managed to spec at a good valuation.
Yeah.
But if you were an investor and you bought it on the first day when it despecced, you just got the timing horribly wrong. So it's luck, unfortunately. He still gets his GCB, by the way. He's gonna live in another mansion. He lives in one now. He'll live in another one. No skin off his back. It's people like us that try to buy in the story that suffers. All right, Occupy Wall Street.
All right. Well, anyway, we'll talk a bit more about that. We'll see how the week goes with Grab and the rest of the stocks. I think just from us, keep it up, right? Listen to some of our challenges as well. We face the same thing as you, and what we are doing. Remember to take the emotions out of it and just look at the fundamentals as well. Yeah. Awesome. All right. Thank you so much, folks. Again, if you haven't, followed us, please go ahead and click the subscribe button on YouTube. Follow us on Facebook. We have a Telegram group, so please join that as well. But love to hear from you.
Oh,
thanks so much.
All right. Thanks. See you next time.